Let's take a deeper dive into what these numbers really mean for the U.S. economy going forward. And for that, we are joined by Hans Despain. He is a professor of economics at Nichols College in Massachusetts. Thanks very much for joining us on Global Business. I certainly appreciate it.
Thank you, Sean.
I want to kind of get to it. Investors aren't now not expecting interest rates cuts from the Fed anytime soon. And as we just heard from John, perhaps not at all this year. Okay, so what does that mean for investors, for the way that investors and really everyday consumers may react to this information?
Yeah, it's not clear to me how investors may react, but you're exactly right. If they're not expecting a decrease in interest rates, that will mean a little bit sluggish on Wall Street and investing. Everyday consumers, I would say that this report was actually pretty poor news, not just the GDP number, which came in much lower than expected in the lowest in several years, but the increase in inflation.
Hans, let's talk about that increase in inflation. And really, if the rates don't come down, mortgage rates are certainly not going to fall. But a forward-looking indicator on U.S. pending home sales was released on Thursday, which showed strong demand for newly built homes, but not so much for the ones that have been on the market for a while. What's going on in the housing market, and what should we look for, and how big of a drag do you think this is going to be on the economy the rest of the year?
Yes, as far as the housing market goes, great news for wealthy people. They will be in the driver's seat of buying real estate and property. It's horrible news for anybody that is low income, median, or even median high income, because they will just be bid out of that market and will not be able to compete with wealthy people. So that's something to keep our minds on with regards to the inequality. What it means going forward with the economy, that was a question. Is that right, Sean?
Yes, sir.
Yes. I'm less worried about the GDP number, just because that the main drag there was imports, increase in imports, which is a negative in GDP. That could be good news, as your lead on suggested, because it could suggest strong domestic consumer demand. That is to say, if we're buying goods from France or India or something, maybe things aren't all bad, even though that's a negative. But the other substantial drag on the GDP number was the purchase of durable goods by domestic Americans, which is just unambiguously negative news, typically. But again, I would focus on the inflation number, because It's not just that the inflation came in at 3.4, but the core inflation, which is to take out volatile goods like energy and food, actually went up even higher, which means that energy and food may be coming down a little bit, at least stationary. It's other prices of goods, and that's very concerning.
Yeah.
And makes it very unlikely interest rates will come down in the future.
Let's talk about the jobless numbers too. Weekly jobless claims falling to their lowest levels in 9 weeks. What does that tell you about the labor market right now? And at this point, with everything else out there, do you think it's going to have a significant impact in the way the Fed moves forward with a rate decision?
Well, that's a great question, Sean. I appreciate it a lot. What we find is the decrease in unemployment, and it will take a little bit of time on the most recent, but those job numbers have been strong. President Biden and Secretary Yellen have bragged about them quite a bit. But as we get more and more detail each month, it ends up that these are primarily part-time jobs.
Yeah.
So what it means is that the majority of Americans are struggling. There's an important report that's just been released by Harvard on housing and renting. Renting prices are way up. 50% of American renters are in financial distress from their housing cost.
Wow.
So
yeah.
The job market number appears good, but when you look a little bit beyond that, there's a lot of economic distress for Americans.
Yeah, you start peeling back the layers of the onion, so to speak. We're kind of tight on time. Let's talk about the price data that's coming out in March that's going to be released by the Commerce Department on Friday. What are you looking for there?
Well, I mean, based on, this is kind of preliminary data for that. It looks like we may see not a resurgence, because that's not what we're seeing in prices, but a pause in the decrease of inflation. So I guess the only good news of that is investors may build that into their expectations. But otherwise, I'm not expecting much good news